Capital received by cash. Organization may raise capital from owners, if there be a need. The initial capital, based on the memorandum of association, has to be received by the organization. In a corporate environment, the accountant may work in any of the following roles: a verifier, a workflow executor, an approver, and a record keeper. The process involves the following steps: document verification, generate cash receipt, approve cash receipt, and accounting entry. Now, let's start the process with step 1. Document verification. This step is carried out by verifier. The verifier's role has the responsibility of verifying various documents considered in the process. The verifier checks the base documents and the trigger documents and confirms the authenticity of the document to continue with the process. Base documents are the documents referred as master document for carrying out any transaction. It may be in the form of signed agreements or records or an oral agreement. Base documents are the documents referred as master document for carrying out any transaction. It may be in the form of signed agreements or records or an oral agreement. The base document for this process is MOA, a memorandum of association, is a legal document prepared in the formation and registration process of a company to define the objectives of the company. The details of the capital amount involved, shareholders, their investments, and the witness are recorded in the document. Trigger documents are those which triggers the initiation of the transaction. It may be receipt of a document, instrument, or due date for the activity. The trigger in this process is the receipt of money. Based on the terms recorded in the MOA, the investor invests 25,000 rupees in the form of cash. The accountant receives the money, counts it, and takes it on record. The accountant has to check if the investor's name is mentioned in the MOA, the amount to be received as per MOA, and the actual receipt of money. Now, let's move to step 2, generate cash receipt. This step is carried out by workflow executor. The workflow executor carries out the process of creating the relevant documents required for the transactions. The workflow executor records the details using a cash receipt form. For future reference and audit trail, the accountant has to record for the purpose of why the money is received, when the money is received, who has given the money, how the money has been received. Step 3 involves approval of the cash receipt. This step is carried out by approver. The approver is normally a senior person in the team with authority to approve the documents for taking the process forward. The process of approval involves the approver to check the documents created by the workflow executor with respect to the base and trigger document. Final step is to pass the accounting entry. This step is carried out by record keeper. The role of the record keeper involves keeping the approved documents in order to carry out the accounting entries pertaining to the transactions based on the approvals. The transaction is then updated in the accounting software. As part of the double entry system, the amount is debited to cash account and credited to the investor's capital account. The record keeper collects the trigger and transactional documents, verifies them, updates the accounting entries in the system, and chronologically files the documents for future reference. This completes the transaction. Thank you.